We've Gautam Trivedi, who's now joining us right here in our studios. He's, of course, managing partner, Nepean Capital. Gautam, great to have you with us here. Good morning.
Good to be up.
Good to be back in the country as well. I guess you're traveling.
Yeah, I was out for 3 weeks to the U.S., both East Coast and West Coast, and I've come back with a lot of stories. So I'm happy to share some of them.
Tell us a few stories.
Have you caught the investors? Did you catch them in your bag and bring them to India?
Yes, you've seen the market going up, and you've seen them coming back. So I'm partly responsible for that. But yeah, I think overall the view on the market out there is that the domestic economy is so robust and so strong in the United States. Whether it's hotels, restaurants, flights, they're all packed. And if you look at the absolute numbers that the S&P 500 companies are putting to work in terms of cash deployment in this year, it's $4 trillion. That's all of India's GDP in just a single year. And of that, half of that is CapEx and R&D. And of the CapEx, about 27% is AI hyperscalers. So this is a number only of the top 500 listed companies. I'm not even counting the other, I guess, 4,000 companies, plus the unlisted private companies. I mean, obviously, OpenAI's CapEx is not captured in this number. So that's the extent of, the absolute amount of money that's being spent. If I break that number of 4 trillion further, 1.7 trillion is actually buybacks and dividends. So this year, U.S. shareholders / consumers will have 1.7 trillion in their bank accounts from buybacks and stock dividends. Next year's number is 4.4 trillion. So that's a 10 to 11% increase over this year. So the economy is very robust. I'm sure that message is coming out loud and clear.
But what about this whole debate around the AI bubble? What's the sense you got? I mean, are there more in the camp who believe that this is a bubble, but ride it till it lasts? Or is it actually, look at the layoffs, for instance. I mean, Amazon is a big story this morning, 30,000 people they're laying off. So, and then the cross-company deals that have been happening.
Yeah.
What's happening with the AI trade?
So the AI story is omnipresent. You could go to we went to Vermont and people were talking about AI. So it's all over. If you look at San Francisco, the Bay Area, I'd say about 80% of the billboards had some AI company advertising their product and, the use case. So, and I spoke to one specific investor who hosted a bunch of undergrad kids, about 30 kids for lunch. This is a bulge bracket firm, and they usually do that, meet students from other universities. And he asked them the following questions: how many of you use AI? Everybody put their hand up. Second question: how many of you use ChatGPT? He said about 80% put their hands up. I guess the others were using some other model. And if you look at ChatGPT, 800 million weekly users. That's 10% of the world's population. So AI is here. Is the business model broken? No. Is the valuation crazy? Yeah. Yes, it's crazy. And then, yes, a lot of people did complain about that. In fact, the question asked to me was, are there AI plays emerging in India? And in the listed, and of course, there's some in the private space, but specifically in the listed space, and we've seen NetWeb just now having a rally. But there are very, very few plays really at this point. So
does that come up as one of the reasons why? I mean, because everyone wants, a slice this AI big boom.
Yeah.
Bubble we don't know, but boom certainly. You think that's one of the reasons why India's kind of lagged a little bit?
No, I think India's lagged not so much from the AI issue. It's more to do with the fact that the valuation's historically been expensive. So I don't think anybody's complaining about our valuation. What's amusing is that at 22, 23 times forward earnings, the US market for Americans looks very, very expensive. Here, people would say, what's the big deal? It's only 22 times. It's really not that expensive, right? But when the issue is high valuation with an earnings slowdown. So you put that together, then we have a real problem.
Yeah.
So the slowdown or the selling in the last 12 months from FIs has been focused primarily because of that. If earnings come back, and that's the question everybody asks me, when are earnings going to come back? And is the revival in demand with the GST cuts, is that sustainable? And I guess we'll know the answer by the end of December as companies start announcing their numbers, or early Jan, should I say. But the fact is, the interest at this point in India, surprise, surprise, actually is very high in interest. Doesn't mean they're coming back next week, but the interest on what's going on in India is very high.
Your note is pretty interesting, Gautam, and you make a mention, and we actually Would have loved to that AI billboard. I mean, billboards and AI around. I think you put some pictures there as well. Wish we could show it.
That reminds me of college time, just the turn of the millennium, the dot-coms. Well, the internet companies lasted and they're thriving today, but not all dot-coms lasted.
Well, I made a analogy with when you go to Pune, 80% of the billboards are residential projects.
Yeah.
I mean, it's like as if this city has nothing else but housing.
Housing.
No, it's actually, I was in Bangalore. It's the same thing.
Same thing,
There's
right?
just property everywhere.
Property. I mean, across.
Hopefully, we'll see more AI in Bangalore.
More AI in Bangalore. You write in your note that interest in China and Japan is peaking.
Yes.
That's the sense you got?
That's the sense I got. So let's make a case for India, and this is what I've come back positive, believe it or not. In spite of all that I've just told you, I've come back more positive on India than I was in the last, I guess, 12 to 18 months. First and foremost, if you look at our weightage in the MSCI, we've gone from a peak of 21% in September of last year, we're down to 15.7. We're now third highest in Asia, within the EM basket, not just Asia, so after China and now Taiwan, and we're number 3. Second is the average investor or allocator that I met is underweight India by 200 to 250 basis points. So that's obviously a huge underweight. If you look at the underperformance that we've had this year, and I'm just going to rattle out some numbers which even I didn't know until yesterday. This was the level of underperformance. Korea year to date dollar return 81%. Taiwan, China 35%. Hang Seng 30%. We're 5% dollar return. So a lot of this makes the case for India starting to look attractive. Plus, as you said rightly in my note, that interest in China and Japan clearly has peaked. 2 years ago when I was in the States, a lot of investors were talking about India and Japan in the same sentence, which was fantastic. But of course, that slowed down. As earnings slowed down, that went out of the window. But I think people are now asking the question that if China's and Japan, we think, have peaked in terms of absolute equity market performance, should we be deploying money in India at this point? And will earnings come back? And will the GST cuts result in a big revival? So that's, a lot is riding on the GST cuts.
Right. And I think, as you said, if earnings come back with the FIs being underweight and post our underperformance, hopefully we do see a gush of money. But earnings need to pick up first. Gautam, in your note, I was going through various aspects, and the chia seed pudding, that's an interesting one. Over the weekend, my wife served me one of those, and glad she's making it at home.
Exactly.
Looking at the costing out there, oopsie daisy, I think babe's doing well, making it at home.
No, but I think, yes, I don't know how much she's charging you for it, but...
No. It's made at home, so that's good.
Chia pudding this small, literally, and I'm on TV, so I can show the size. It's this small.
Yeah.
It's $10 in New York City.
Oopsie daisy.
So what is this?
It's just a chia pudding, this small.
Pudding. Okay.
It's extremely good for health, Prashant.
Yeah.
I was told on this weekend.
But you need a couple of them, about $30 to actually make a real meal out of it.
And you've mentioned as well, hotel room rates as well are going skyrocket, right?
Exactly, yeah.
And okay, let's get back to another important factor for our markets, the trade deal. Our numbers not coming. I mean, we thought we would be top of the pops, maybe the first ones to get a deal. That's not happened. At least over the last month or so, some optimism is coming back. How important is that? India getting a favorable trade deal, in light of this entire foreign institutional holding here in India?
That's a very good point because, the question I think in some sense is that has the trade deal or the lack of it impacted our foreign portfolio investors from putting more money to work in India?
Has it?
To some extent, yes. Of course, it would be a emotional positive or incremental positive for India if that were to happen and whenever that happens. But I didn't get a sense that was holding back investors from putting more money to work in India.
Okay.
Because the fact is, we're only 80 billion in terms of total exports to the US, less than 2% of our GDP. So I don't think people really cared so much as they did for China and the US.
So the trade deal doesn't move the needle too much.
No. It brings back the annual spills.
It brings back a positivity.
It brings back sentiment, which brings me back to earnings. Because
that's right.
I was hearing you say that, and it's so true, right? We kept, saying that 22 times, 23 times, they're always an expensive market. I mean, big deal. If you have to be in India, you have to pay a premium.
That's right.
But those were the years when we could boast of 15% plus compounding growth for quarters together, right?
Yes.
Now, what did you tell investors? And they're asking you about this, right? Is earnings coming back?
Yeah.
What's the sense? I mean, not 1 quarter or two. This is a bigger issue, Gautam.
It's a bigger issue, yes, undoubtedly. And I think but there are two things. Again, we've seen over the past 3 to 4 years, the money that's coming into the equity markets is driving the equity markets. And the money is coming into the equity markets not because of earnings growth, earnings slowdown. It's coming in spite of the earnings slowdown. So why is it still coming? Because the alternative investment avenues yield lower yields. So as a result, are you going to put money in a savings account? My HDFC Bank account is 2.5% pre-tax. A 1-year, 10-year fixed deposit is 6.5% pre-tax. I think we're doing a good job of marketing the equity markets through CNBC and the media. So people are putting money, every single day, every week into the equity markets. And the other statistic, which I may have mentioned before, is that of the 120 million unique investors in India, 5 states account for 48% of those investors. So the equity culture, which has started to spread over the past 3 to 5 years in India, which is great, has not even reached the halfway mark. We're talking of more penetration coming over the next 5 to 10 years.
Which is great, but it's also a bit of, I don't want to be a big bear here, but that's also a bit of a risk building, right? Because that equity culture will keep growing and people from tier 2, tier 3, tier 4 will keep investing. Again, if you don't have earnings, then we'll be trading with our own money, we'll be trading at 24, 25, 26, 27 times because there's so much money chasing the same earnings pool. Isn't that a concern?
That is a concern, yeah.
A lot of supply as well, right?
And a lot of supply. Thank God for that. Yeah.
Thank God there's supply, because if the supply wasn't there, then the market would be even more expensive. I mean, the secondary market. So it's good to see that there's more supply coming.
I was speaking to an investment banker just yesterday, off-camera conversations, and he was like, let's face it, at the end of the day, you've got to get the animal spirits fired up. People have to start putting money to work to create capacities, to create businesses, even if those capacities lie idle for 1 or 2 years. Till that happens, and it reminded me of what Mr. Uday Kotak said, right? I mean, if you're just about selling businesses, doing the blocks, running family offices, and then you complain earnings nahi aa raha hai. Can't have it both ways, right?
Yeah, absolutely. And I think it's a good point. Gautam, in terms of, markets is, of course, all about picking individual names, right? Individual ideas. So what are you doing?
So, what we're looking at financials are back. The good news is that you've seen a lot of M&A activity, strategic change in CEOs, restructurings. So the financial sector, and I mean the overall financial sector, not just the commercial banks, but even the NBFCs, the gold loan companies, etc., all of them are having events and triggers that are happening around them. So, that's a very exciting space to be at this point. Secondly, I think going back to AI, there will be more AI companies, much like, today there are a plethora of about 15 EMS companies that are listed. 5 years ago, Indians didn't even know what EMS stood for, and now we have 15 companies, and Dixon, of course, is the poster child, but there's so many others that are doing extremely well. So I think there are emerging businesses coming, new IPOs of companies that, are very unique in different businesses, aerospace, defense. And I think AI, hopefully, we'll see more companies IPO over the next few years.
Fractal's IPO is coming.
Yeah.
And I think next month, right?
I believe so, yeah.
But some $3 billion valuation.
Yeah.
So we'll have to see.
But Gautam, since you're in the studio, you've given us a couple of themes.
Yeah.
What have you all done? If you could name a couple of, with due disclosures, what do you like? A couple of themes you like?
Yeah. So
if you could name, a few names as well, will be helpful.
Sure. Our way of playing AI actually is through power.
Okay.
So, based on what you've seen over the past 12 months, power is really the need, if you want AI to succeed. So the Wall Street Journal last week had an article which said that as of the end of 2020, 2% AI hyperscalers consume 2% of the US electricity total consumption. By 2028, it's going to be 12%. We'll have a similar situation here. I don't know what the numbers here today because we have only all of 1 gigawatt of capacity. But if going by all the numbers that are stacking up, going to 9, 10 gigawatts, we're gonna need a lot more power. So in our case, we played a power as a theme that's going to be sustainable for the next multi-decades. We like TD Power beyond that. Our portfolio is on our website, so no, you're not concealing anything. We like GSW Energy. We like transformers and rectifiers, so we have a bunch of these stocks, and we like Inox Wind.
All right.
IPOs, just give us your overall sense on valuations and whether it's a decent party, well-regulated party, or if it's getting a wild party. Lenskart asking for 70,000. And some of the new companies obviously don't make profits also. I mean, and you have to look at, I think it's coming at 10 times sales. There's been LG, however, on the other side, Urban Company.
But look at LG. I mean, I'm glad you brought that up because the valuation of LG India is more than the valuation of the parent. The market cap is more than the market cap of the parent. So what does that tell you? That domestic investors just don't care. They're looking for the next interesting stock, and they want to hold it for from 6 weeks to 6 months to longer. But I think that's where,
Are you comfortable with the kind of asking numbers?
Well, the fact is, Shubhi, you've got to put on a capital markets hat. We all do that when we buy and look at a stock. Yeah. When we buy the stock, the first thing we think about is how will the market appreciate this number? If it's trading at 35 times, is the market ready for 35 times? I'll give you an example. We used to own Varun Beverages for the longest time. It traded at 45 times earnings when people said, gee, this is so expensive. The market's comfortable with this number, so why are we fighting this? So, I mean, I think that's the other way to look at this.
Yeah. As long as the growth can justify it, absolutely.
Exactly, yeah.
And also one point with regard to this IPO euphoria, right? At times, since we just spoke about Urban Company, the stock is sub 150 rupees. Just post-listing, very good story, long runway. Yeah. You need to be careful at times with regard to this listing euphoria, because the stock from 200, now it's at 150 odd, so you'll get your entry point. You need to time it a little bit better, I think so.
Absolutely. Okay, Gautam, great conversation. Thank you very much. And
thanks,
as always,
seeing you guys again.
Love getting those snippets from the ground after your US trip. So thank you for joining in on that. Have a good day.